When it comes to investing into individual stocks, for the most part, they normally get a really bad reputation. This is mainly because in America alone, there's more than 2,400 publicly listed companies to choose from, and for the everyday investor, picking one that's going to actually make them money in the long term is going to be a very hard and overwhelming decision. However, it really doesn't need to be that difficult, which is why in this video, I'm going to be sharing with you my 7 top stocks that you can just simply buy and hold forever with some high growth and returns along the way. Oh, and if you do stick around, what I'm going to do is share with you a secret that has made investing for me a completely stress-free and easy thing to do. But having said that, let's get into it. All right, so let's kick things off, and I guess let's get the most popular one out of the way first, and that is of course going to be Apple. This is a company where if you invest into it, you're pretty much becoming a part owner into the biggest company in the entire world, and fun fact, it's actually the first ever company to reach the 1 trillion market cap milestone. When it comes to my investments, Apple was actually the first ever stock I decided to buy, mainly because I love their products, but when you actually break down its business model, it goes way further than just having good iPhones and laptops. They also generate revenue from things such as their software and services business, different kinds of streaming platforms, and of course, let's not forget, it's likely that we're going to see an Apple car at some point in the near future as well. Now, another big reason as to why I really like Apple stock for the long term is very much how much cash they've got sitting in the bank. As of right now, they've got roughly around $200 billion just sat there as cash in the bank. Now, that's some money I would like to get my hands on for a start, but why this is actually so good is because one, having this much cash in the bank as a reserve is going to allow them to navigate through any kind of market downturn or recession, and two, having this much cash to play with also opens up the opportunities to potentially acquire some of those up and coming companies, which is definitely going to help keep them away from some potential competition in the future. As of right now, to buy one share in Apple stock is going to cost you $174.31 a share, and according to Simply Wall Street analysts, the stock's fair value currently sits at $195.94. Next up on the stocks to go ahead and buy and hold for the long term is going to be the Walt Disney Company, and really, what is there not to love about it? Now, I'm going to take the initial assumption that most of us grew up watching these classic Disney films as children, and the super lucky ones were able to visit one of the 6 Disney resorts based all over the world, but the company goes way beyond just watching Toy Story and having a Mickey Mouse teddy bear. When it does come to taking a look at this company with the mindset of holding this stock for the long term, I really do think there are some key aspects that really give me the confidence in this company that will continue to keep it growing in the decades to come. The first thing is that I actually look at Disney as an evergreen media company, and what I mean by this is that no matter how old the films get and how old they are, or how old you even get, the films are always going to be relevant to you at some point in your life. There's always going to be children in our lives, of course, no matter what. And with Disney having absolutely zero competition, in my opinion, coming close to them in terms of the production of their films, it's going to be an area where they would just never struggle for revenue. And another thing I love about Disney as a long-term hold is definitely going to be their ability to innovate and expand into other revenue streams. Over the years, Disney has been able to diversify its revenue into so many different streams. First off, we of course have the movies, we then have the parks, but then we also have revenue streams such as merchandise, studio entertainment, and their most recent big move, of course, into the streaming world with Disney Plus. In fact, when Disney first ever launched Disney Plus back in 2019, it set an initial goal of reaching 90 million subscribers in 4 years, which they managed to surpass in just 16 months, which I think is absolutely insane for starts. But of course, they did have the help of everyone staying indoors. What they have now gone ahead and done is revised that target to between 230 and 260 million subscribers between that same time period. And just as a comparison, Netflix as a streaming service, whilst it is still very successful, of course, has around 220 million subscribers right now, and it's taken them around 12 years to get there. As of right now, to buy a stock in Disney, it's going to cost you roughly $137, and it has a fair value estimate of $238, which leaves it 42.5% undervalued, which I have no issues with right now because I'm looking to buy a lot more of this stock for myself. The next company on the buy and hold forever list for me is going to be a company called Nvidia. Now, when I mention Nvidia to my, let's say, non-investing friends, it really surprises me that most of them have never actually heard of this company. But what surprises me even more is that this company currently sits as the 7th largest company in America and still people have never heard of them. Now, in terms of what they're known for, it's mainly for designing state-of-the-art graphics processing units for both gaming and professional markets. However, the company goes so much further than that. Recently, Nvidia has decided to make a big push into the metaverse, and for me, whilst the hype has taken a slight dip of this kind of new technology, I'm still very biased on the fact that the metaverse and the Web 3.0 world is certainly going to be the future, and to see Nvidia planting their foot right in the middle of it is only going to be a good sign for the future of this business. Oh, and it's not just the metaverse where Nvidia is expanding its product range. Companies like Tesla use Nvidia for the chips in their electric cars, and even the MacBook Pro I use has an Nvidia graphics card inside. One thing that's interesting when we go ahead and take a look at the valuation of this company, Simply Wall Street is rating this stock as overvalued right now, with its current price being way above the fair value, which to some point I actually agree on. But as this is a video about buying stocks and holding them for a very, very long time, both of these prices, in my opinion, come 10-20 years down the line, are going to be completely irrelevant in terms of the bigger picture. The next one for me is going to be a personal favorite, both on a product and a stock point of view, and that is going to be CocaCola. Now, when it comes to investing into the stock, it's just going to be one of those companies where you know what you're going to get. In terms of its business growth, you're not really going to see too many surprises, and the stock price isn't really going to go up too high or down too low, depending on any kind of news. But this company is obviously a clear leader in its market, and not just for the classic Coca-Cola drink, but also for the other brands that it actually holds within the Coca-Cola Group umbrella. Another reason why I like to invest into this company long term is how well these brands are actually known on a global basis as well. Just looking at this chart right here, we can see that a couple of years back, we actually saw more of its revenue share coming from developing and emerging markets in comparison to the primary one. And finally, one thing that I cannot forget about Coca-Cola as a long-term stock hold is, of course, its amazing dividend track record. Now, this is a company that has increased its dividend back to its investors for 60 consecutive years, which certainly does give me the confidence for the future in terms of the way this company is going to be ran. Right now, the share price for Coca-Cola currently sits at $62.87 and currently has a fair value of roughly $70, making it roughly 10% undervalued according to analysts. Next on the list is going to be Johnson & Johnson, who are the world's largest healthcare company, and I think the reason to be confident in this stock long term kind of goes without saying, because at the end of the day, we're all getting older, no matter how much we don't like to admit it, and I think if the past 2 years is anything to show for, our health is more important than anything right now, and J&J sits right at the top of the food chain for when it comes to it. Currently, it's the 12th largest company on the S&P 500. It has a dividend yield of 2.38%, and just like Coca-Cola, this year it will see its 60th year of continuous dividend increases back to its investors. Buy a share of Johnson & Johnson, right now it's going to cost you $178.19 and has a fair value of $264.86, making it undervalued. But please remember, whilst I am using these numbers for this video as a guide, in the long term, most of this analyst stuff won't actually matter because all of these numbers are going to be completely outdated. Now, the next stock is one that I just simply couldn't leave out, especially if I'm making a stocks to buy and hold forever video, and that is going to be, of course, Amazon. And when you think about it, what else is there really to say about this company? This is a company that, not just within its own sector, but other sectors as well, sits completely in a league of its own. The infrastructure that they have built within their Prime delivery model just can't be beaten, and their customer-first approach has help them become completely unbeatable within the e-commerce space. The amount of cash the company holds allows them to basically buy out anyone that has ever seemed like a threat to them, and just like all of the other stocks mentioned previously, they are always innovating with multiple forms of getting revenue. You obviously have Amazon.com. You then have third-party seller fees where Amazon have allowed people to build a business on top of their platform. And then from there, you have the Prime subscription service, which includes features like next-day delivery, video streaming, and music. One interesting thing that happened recently is that Amazon announced a 20-to-1 stock split, and whilst this won't change anything fundamentally about the company, it's going to make this stock more accessible to a larger number of investors due to its cheaper price. Right now, which is pre-stock split, if you wanted to buy a stock in Amazon, it's going to cost you $3,271, and it currently has a fair value of, let's hear it, $6,816, seeing the stock is currently 50% undervalued according to analysts. Now, the next company on the list is a business that I reckon if I was to say I was going to place a bet on any company being here in 100 years from now, it's definitely going to be this one, and that is of course going to be Google. Now for me, I look at Google as a company the entire world relies on, and most people use it without even thinking about it. So much to the point that, believe it or not, you right there, you're even making Google money right now. This is of course because YouTube is in fact owned by Google, and every time you watch a video on YouTube and see one of those ads at the start, Google has just earned themselves a little bit more revenue. But once again, the revenue streams certainly don't stop there. Just taking a look at this hierarchy structure of Alphabet, which is actually the group that Google sits within, you of course have the Google products like YouTube, Android, Google Maps, but you also have so many other revenue streams like Google Nest, which are the smart meters for homes, and Calico, which is a company that researches into life expansion, which I'm sure we could all do with a bit of. Another interesting thing about Google is that recently, just like Amazon, they too have announced a 20-to-1 stock split to make their shares more accessible to investors, and this was taken very positive from the point of view that it actually caused the share price to rise 9% in a single day. If you wanted to buy Google right now, it's going to cost you $2,803 before it's split, and the analysts are once again valuing this company as way below the fair value. Now, one thing that you may be saying to yourself is that, well, all of the stocks that I just listed so far are some of the biggest companies in the world. Of course, they're going to be good investments to go for in the long term. This isn't really groundbreaking stuff at all. Well, guess what? You're right. Making money from your long-term investments doesn't need to be about reinventing the wheel. All you need to do is pick good companies with solid business models that have a great potential for the future, and all of the companies that I picked in this video have just that. It doesn't need to be anything exciting or groundbreaking or too complicated. In fact, the more simple a company's business model is in terms of the way they make money, I think is the better. But if the thought of just holding a few individual companies is too risky for you, then the secret that actually helped me with my investments was just to buy them all within a completely diversified index fund. For example, if you invested into Vanguard's S&P 500 ETF, you would get your hands on all of the stocks that I've mentioned in this video, plus exposure to a further 493 companies on top. In fact, if you wanted to know about the best ETFs to invest into during 2022, then you definitely need to go ahead and check out this video where I share my top 5 Vanguard ETFs. I'll see you in there.